The Federal Reserve Board Vice Chairman Donald Cohn today is sending out a very strong signal that the Fed could once again cut interest rates when it meets December 11th. The stock market reacting, well, positively to say the least, after a correction of 10% since the early October highs. But are these comments enough to calm investors for the foreseeable future and really resolve this mortgage mess? We turn to our panel. Drew Kanaly, he's chairman of Kanaly Trust Company, and Ed Ponzi is the president of FXEducator.com. Drew, to you first, is this really enough salve for the markets if the Fed cuts rates again? Is it really going to fix things? Because you saw a spike, a new record in early October after that September cut, but then a correction. So are we just in store for that?
Well, let me say first, rumors of this market, this economy's demise, as Mark Twain would say, are vastly overrated. We're not going to go into a recession. That is not going to happen. Our latest GDP numbers were 3.9%. They're going to get revised tomorrow, and they're not going to get revised down. They're going up. So the economy is in good shape.
Drew, do you think, you sound very upbeat about the economy. Do you worry about the impact on inflation if the Fed keeps cutting rates?
Well, earlier this summer, Chairman Bernanke came out and said that they had two issues they were going to frame a rate cut around. One was rising energy costs, and the other one was a rise in unemployment. Well, you've got a little tick up in the unemployment number, and so they acted. Also connected to the credit crisis. What the latest Fed statement says is they get it. There's something going on here. They need to be more nimble. They need to be more reactive. And so they're going to be responsive to whatever the market needs.
Do you think, Drew, that this is enough? Well, the Fed gets it. They've got enough guns. They've got enough ammunition to fix this thing.
Well, the Fed, remember, the Fed can only do so many things. They can affect money supply, and they can affect the Fed funds and discount rate. But the economy itself is chugging along just fine. You just have a little crisis in confidence, not little, it's kind of big, in credit. But you still have good tax policy, good trade policy, good regulatory policy, fabulous corporate earnings. Maybe they're not growing as fast as they used to, but they're in good shape. It's all in very good shape. You just have a little issue about credit presently.
Drew Kanaly, thank you so much, both of you.
Good to be here.